What are the differences between long-term care insurance and life care at home programs? Well, here to talk with me about this is Lynne Giacobbe. Lynne, welcome.
Thank you. Thanks for having me.
It's a pleasure. So you recently wrote an article about this very topic for Retirement Daily. We're eager to have you walk us through it. What do readers and viewers need to know?
I think one of the biggest differences, as you just asked, between long-term care insurance and continuing care at home or life care at home is really long-term care insurance is a payer source. So it can certainly help to cover the costs of long-term care over time. Uh, Kendal at home and continuing care at home or life care at home is really about walking alongside a member for their entire lifetime. From the time they join, when they're healthy and independent, there's a care coordinator or navigator who's really walking that journey with them. We want to, number one, help our members to stay healthy and independent and achieve the goals that are important to them. And for each one of them, it may be different. So that care coordinator is really working and walking alongside them, developing that relationship and helping to empower them to achieve the greatest outcomes. And when things do happen, they are coordinating those services and bringing care in. And we also pay for those services. But I think probably one of the most valuable assets to this life care plan is having that person that knows you, is familiar with what's important to you, and really coordinating the services to meet your specific needs,
Right,
and hopefully helping you to regain that independence at some level.
right,
Where I think long-term care insurance comes into play really when you're at a more advanced stage of needing care typically for a long period of time. And as I said, it's reimbursing someone for the care that they've paid for once they've received it, and meeting different criteria based on the long-term care insurance plan they've selected.
right. In the article, you talked about there being a planning gap.
So when a person has long-term care insurance, they're selecting different levels of coverage, so a daily benefit amount. They're also selecting an elimination day period. They can select maximum periods of coverage. So someone who, let's use, they have a knee replacement or a hip replacement. Most people are going home from the hospital now and not going into skilled nursing after a joint replacement. So someone goes home and they may need quite a bit of care shortly after that surgery. And then that care will diminish over time as they regain their independence and rehabilitate at home. So long-term care is probably not likely going to pay for any of that care, because by the time they're through that rehabilitative process, they probably have not even met their elimination day period. And typically you'll see 30, 60, 90. I have one member who has a 180-day elimination day period. So that's a 6-month period where they need to receive a certain level of care consistently for that period of time before they're even eligible to receive any reimbursement or be approved for benefits under their long-term care insurance plans. So many of our members do have long-term care insurance. They're people that are planners. They probably selected it years ago, and we work together with them to access those benefits and enable them to take advantage of that benefit whenever possible. But we're covering care probably for a much broader stretch. Our requirements for providing that care require one activity of daily living, where long-term care insurance typically requires at least two. And, I think, to give an example, if I were being evaluated to determine whether I had an activity of daily living or a deficiency in activity of daily living, let's take eating, for example. The long-term care insurance is going to evaluate whether or not I can actually get the fork from my plate to my mouth and feed myself. When we're evaluating a member's ability to meet that activity of daily living requirement, we've really got to look at this from a much broader perspective. How are they getting the groceries? can they stand at the stove and prepare the meal, and then can they feed themselves?
Mm.
And that really drives a care plan to be much more comprehensive. It isn't going to help if I can feed myself if I can't get that food on the plate. And that's really important. And so many times you'll find that when someone has that, they're incapacitated in some way, they need much more support than someone just to feed them that food from their plate, but it's actually preparing a meal, getting the groceries, those kinds of things. So those are some of the bigger differences I think you'd see between a life care plan at home as opposed to a long-term care insurance product.
Yeah. So you just hinted at this a little bit. A lot of folks are always concerned about if they have a long-term care insurance policy, how they'll prove that they have a need. Talk more about that.
So typically what happens is a long-term care insurance will send someone out to assess their needs and determine whether or not they meet those criteria. They also typically have to have a physician's order that states that they have these activities of daily living deficiencies and that they need assistance. So there's a lot of criteria that has to be met. What I tend to see most often is when someone has a diagnosis of a permanent, progressively debilitating disease, you're often going to see those long-term care insurance claims being approved at that point because they inevitably are needing a great deal of care.
Mm.
Where I think it's more difficult is on the side that someone needs care intermittently or maybe a short term, they're not quite meeting the criteria. And so there are definitely gaps there.
Mm. So there are some semantics with respect to care coordination. Tell us about that.
So, I think one of the greatest advantages, and I think members would share this, and I know they state this in satisfaction surveys year after year, but the value of having known the care coordinator sometimes for years, and we've been in existence for over 18 years. Some of our members have been in the program for that long a period of time and have been working together with a care coordinator for that long. So they have a long-standing relationship, often become like family. They're trusted. They know the family. They often know adult children or spouses. And so we have a much better understanding of what's important, what the home environment is like, what the member is like, and what's important to them. With a long-term care insurance plan, that person's coming in to evaluate and assess the need, and then the long-term care insurance is going to be reimbursing the member for that care. But you think about if a caregiver, in this day of COVID, if a caregiver gets sick and they can't come to work today, is that member who is incapacitated really going to be able to call another agency or call someone to get care, or someone who's just had surgery and is being discharged and gets a list of home care agencies? How do they know the difference between a private duty home care agency that's private pay, a skilled home health agency that's going to provide therapy and maybe help with some medication management or things like that? That's where our expertise really comes in. We have strong relationships with all of the providers that are necessary to enable someone to remain in their home. And when you think about someone who can't feed themselves or is incapacitated as a result of an illness or surgery, there are often other things that go undone as well. So who's going to pay the bills and who's going to manage the household things that need to happen? And Kendal at Home really embraces that member and coordinates all of those services. We don't pay for the home management and we don't pay for bill paying, those kinds of things, but we bring all those service providers into play, and we can assure that they're trusted, bonded, insured, and have whatever license or requirements are necessary. we've vetted those providers before we're bringing them into the home to provide any service to the member. So I think those critical partnerships play a big part in being able to support that member and enable them to age in place for as long as is necessary.
Yeah. So how might you compare and contrast continuing care at home versus, say, the hiring a geriatric care manager? Is there similarities or differences?
No, I think, geriatric care managers and some of our care coordinators are geriatric care managers. The biggest difference is, again, that relationship, having known them and worked with them for years, and knowing them when they're healthy and independent. We get to know what their tendencies are, what's important to them. And we can also begin to identify, we do annual assessments. So if they're struggling with something, we have a member who's a tennis pro, and we did some assessments around falls and gait and really measuring someone's balance and knowing how important preventing falls is for older adults and how that interplays with care and care costs. But really, it impacts quality of life so significantly. And, he did the assessment and we identified some gait issues. And he said, my game's been slipping some, and I really didn't understand why. And so he was able to get an order for physical therapy, engaged in physical therapy, and really addressed some of those balance issues that were beginning to emerge for him.
Mm.
That happened as a result of that ongoing interaction we have with a member, even when they're healthy and independent. A geriatric care manager could certainly have come in and assisted in helping him to address the problem once it was identified. So maybe he had that fall and now needs care, and that's when you call that geriatric care manager. And they're not likely to have been involved on a long-term basis and really gotten to know the member and know this isn't normal for them at this point in their lives. So something's happening. Let's explore what it might be. And it comes back to that relationship and really knowing the member and where they are in their health status.
Yeah. So I'm sure that we've spiked a lot of interest in this type of program. Can you talk a little bit about what the costs are that are involved?
Sure. So the costs they vary. So in some ways, a member is still going to select a daily benefit amount that they choose for coverage in terms of care, what they would like for us to cover in terms of their care. So it varies depending upon that. And then it also varies depending upon their age. So they're going to select from tier 1, 2, 3, or 4, which increases it, from $150 a day to $450 a day in coverage or benefits for them as they need care. And then their age also plays a factor in that. And then they can vary depending upon whether they want a $500 monthly fee or $750 monthly fee. So those entry fees can range, a great deal depending on all those factors. But, someone who's 75 years old coming into tier 2 might pay $75,000 or $80,000 coming into the program. And they pay that once. 100% of that fee is going to be tax deductible as a prepaid medical expense. And we've had many members who have been audited in the year they've joined the program, and we know the IRS has upheld that attorney's opinion on that. And then there's also a portion of that monthly fee that's going to be tax deductible. It's very unique to this program because if you are moving into a retirement community, you can deduct a portion of that fee as a tax deductible expense and prepaid medical expense, but not all of it. And if you're paying for care as you go, it doesn't meet the criteria for that tax deductibility again. So there are those benefits. And then there's no elimination day period. A member's eligible for services from the minute they join the program. And there is no lifetime limit on how long we'll pay for care. So when you're looking at a long-term care insurance product that has a limited cap in terms of what that benefit's going to be, Kendal at home, if someone had a stroke 3 months after they join the program and they live for 10 years, we're going to be paying for that care for those remaining 10 years. There's no cap on how long we'll pay for that care. So they've selected that daily benefit, and then we're committed to that for the remainder of their life.
Yeah. All right. So last question. In the article, you talked about this notion that many folks who own long-term care insurance at the moment are seeing their premiums rise, and
Yeah.
many insurers are now offering what has been described as buybacks to
Yes.
policyholders. Just share with us what all that means.
I think that, as I mentioned, many of our members do have long-term care insurance, and many have been calling us saying they don't want to maintain these policies any longer because they're getting these letters stating that their premiums are going to increase tremendously over time. And I think when I started this program almost 19 years ago, our actuary said to me, you have to keep pace with the cost of care, and you need to maintain incremental increases in those monthly fees. If you don't do that, you will be in trouble down the road. And I think, I'm not an expert in insurance by any means, but I think that, what we're seeing come to fruition is that, keeping pace with that cost of care has maybe been a challenge. And there are at least one of the long-term care insurance companies involved in a class action suit right now. So that's impacted premiums and has really forced some of our clients to step away completely from their benefits and just get a paid out benefit as a result of that suit. So there seem to be quite a number of factors that are swirling around in the long-term care insurance industry. And the product is changing to some degree as a result of that. And hopefully will be a better benefit as those who are considering long-term care insurance. But there are a lot of factors, I think, that are playing a part in impacting those premiums. But without a doubt, we're seeing some members reporting as much as 300 to 400% increases in premiums right now. And that's pretty significant when you think about these older adults who have been planning all their lives, and now when they really are likely to need that benefit, really questioning whether or not they can sustain it over time.
Yeah, and that's a huge increase given that, at least according to my understanding, that most insurance companies have to get state approval on their premium increases before
That's
they
correct.
put those kind of, so that's a dramatic increase.
Yes,
And you
it
mentioned,
is. And it's opened the door for many of these companies now to come in and begin increasing those premiums as a result.
yeah. And then the other thing I'll just make mention of, you mentioned that there are a lot of new developments in the LTC market, one of them being the introduction of hybrids where the long-term care
Yes.
policy is attached to an annuity or a life insurance.
Yes.
And they tend to be, from my perspective, a bit complicated, but perhaps make them more appealing as a product, given no one knows whether they'll need the long-term care insurance or not.
Right, that's correct. And I think it's one of the challenges to any one of these programs, right? We'd all like to believe that we are never going to need that care. I'm not going to be the one to have that fall. I'm not going to get that diagnosis. And the reality is that, more than 70% of us are going to need long-term care at some point in our lives. And how prepared are we for how we handle that? We plan every aspect of retirement, but we pay very little attention to how we're going to manage our long-term care. And when you look at the world we live in today, it's probably one of the most significant expenses we're going to encounter as we retire and age.
Yeah. Well, we've covered a lot of ground. Anything that we missed, or anything that just bears reemphasizing before we wrap up?
No, I thank you for the opportunity to join you today, and certainly encourage people to go to our website, learn a little bit more about our program, and learn about continuing care at home as an option for someone who's thinking about that long-term care planning in their retirement days.